I'm Linda Sampson, principal of Sampson Law Group. I'm licensed in New York and New Jersey. One of my very many areas of practice concerns property tax appeal, including commercial properties in Manhattan, Brooklyn, Northern Westchester, New Jersey, Westchester, Putnam, Dutchess, and Warren counties. So our agenda today, we're going to cover 4 topics. This is a nutshell version of property tax appeal because I love it so much I could talk about it for days, but this is the short version. So we're going to talk about death and taxes. So property taxes are ad valorem taxes. What goes into them is school, municipal, county taxes, and sometimes special districts. And each property is considered unique. So we're going to also talk about the assessed value. What is an assessed value? What is the full market value versus the fair market value? Play on words there. How does the assessment translate to the taxes that you pay? Our third topic is going to be bringing grievance. We start with the complaint process, the Board of Assessment Review, and the petitions that you must file in order to be successful. Our fourth area is the reduction of the assessment. If you get a reduction, what it includes, how the tax base is affected by the lowering of the assessment, and whether special districts are in or out on your transaction. So J.C. Watts is quoted to say, "Death and taxes are inevitable, but the two shouldn't be related." That's a quote that I found in the beginning of my years doing property tax appeal, and I just love it because I think many of us feel like taxes are going to be the death of us. So if we're lucky enough to own our own home or business location, then we certainly are paying property taxes. These are among some of the highest taxes that we pay are for our real estate holdings. So the type of tax we're paying when we pay property tax is an ad valorem tax. These taxes are based on our property, based on the full market value. That is the assessor's determination for the jurisdiction or jurisdictions, plural, our property is located in. So the central question is, how does the assessor's full market value compare to the marketplace fair market value? Which bag of chips are we really paying for? So sometimes we feel like we're paying for the big bag of chips, but we're getting a little bag of chips. And we'll talk about that as we go on. This means that the ad valorem taxes means that the city or town or village that our property is situated in will be taxing us based on the value that is added to the unique location of that property. Ad valorem is sometimes based on the sales price of the property. The market value is defined as the most profitable price that a property should bring in a competitive and open market under all conditions requisite to a fair sale. The buyer and the seller each acting prudently, knowledgeably, and assuming the price is not affected by undue stimulus. Value is added to a property by rental income, the subject property, as well as the type of structure and its condition, effective age, and materials that the property was constructed with. Sometimes the market value is calculated on property purchase price and sale values using a discounted cash flow or income capitalization method. And rent is also a factor, and it can be forecasted with looking at a return on investment or the net present value of the long-term leases. So a central document in bringing a property appeals case of any kind, whether it's residential or commercial, is to review the assessment roll. So here I have a model, and I break down A through L, and we'll go over it quickly so that you have a better understanding of the elements that are on it that affect all the filings that you're going to do, and ultimately the full market value or the assessed value of the property. Oops. Anyway, A is the Swiss code. That's the unique identifier for the jurisdiction that you're in. B is the uniform percentage of value percentage. So why we have this here is that if it's a percentage, you're going to take the value of B and divide it by box H, and you're going to get the percentage of the of the that gives us the assessment value. So B divided by I gives you H, and so you can see that H is 95% of I, and that is the full market value that the assessor says your property is worth. Why is a percentage important? Because when we look to fill out the complaint form, we have to decide whether we're unequally assessed or excessively assessed, and these values become major factor. We look at C, that's the valuation date. In Westchester, most jurisdictions are July 1st. And that is the date that the assessment is frozen, so that when an assessor does, the appraiser does an appraisal, they're going to look at the data around that date, usually 60 days before and 60 days after would be a perfect scenario. And any sales that were in that bracket are relevant, or most relevant. And so they're more useful. Data that's more scarce will span out the bracket to up to a year, or maybe sometimes more. And so we get a warped valuation that we have to defend. So the taxable status date can be anywhere from March. In town of Cortland, it's May 1st. So on that date, on or before that date, if the property is burned down, then the property is just the land value. If you have an open building permit and you close the building permit before the taxable status date, you're going to be assessed at the full value of the improvements. If it's only partial, they'll estimate what the value of the property is based on how much of the property is finished and how much the permit is closed off. So as you can see, there's a great deal of information here. You also have your exemptions in box J. In box K, you have your county, school, city assessment values. You can see here that the school value is lower than the county and city, and that's because the city and county have a different roll year than the school district. If you remember, if you have closings, you know that there's different tax roll years for them, and that is why the assessments are different. Box G is the land value of the subject property in assessment dollars, and H is the total improvements that are on that property. At the bottom of every roll, the assessor has to swear and certify that whatever he's put here is a true value, and that gives a lot of weight in court, and that is why we have to disprove the assessor when we bring our case. So property taxes are broken down into the land and the total value. In this model here, this is an actual assessment roll, tentative assessment roll for 2022. The final roll is due in a couple of weeks. Again, up in the upper right-hand corner, it tells you what the valuation date is and the taxable status date. When you have an exemption, like a star exemption or a veterans exemption or some other exemption because of a non-for-profit, you have to file for all of your exemptions before the date up here. So here is 5/1. So if you mail it and they get it on 5/2, you've missed the date, you're out of luck. Again, on this property that I've highlighted, the property value in assessment dollars is $350, and the total improved value, including the land, is $13,850. And you take the $13,850 and you divide by the equalization rate, because this is a commercial property, and you get the assessor's full market value, which he believes is the true value of the property that the homeowner, the taxpayer owns. This is the value that we need to disprove, and we go about it in a number of different ways. So where do we get the equalization rate form? So we go on to ORP's, Office of Real Property Services website, and we say ORP's Municipal Profiles, and we click on that, and it comes up with a map of New York State by county. You click on the county, then you click on the jurisdiction, the town, the city, or the village, and you get another screen. And the other screen tells you, what do you want to look at? Do you want to look at the residential numbers, or who the assessors are, or what the equalization rate is? In this case, we want the equalization rate, and we click on the equalization rate tab, and we get a whole chart by year. And we see that in this jurisdiction, it's a fractional number, not a whole number, meaning 100%. So we divide the 13,850 by the fraction of the equalization rate, and we get this number here. So when we talk about land, we mean just land. We don't mean the fences. We don't mean the wells and the different things that are on the land. We just mean land. When we talk about the improvements, it encompasses all the improvements. If you've got a water tower, if you've got a building, if you've got a shed, if you've got fencing, all of that adds to the improvements because it's adding value to the land. Sometimes the value that's added is a negative, but if you think about having to take it away, it has a value and we have to deal with it. So the ad valorem tax is again based on value added to the property. And so depending on whether it's residential or commercial, the calculation for the improvement is vastly different. So in the commercial arena, we look at a rubric. So that's utilized to figure out the value of the business and the business structure, along with any of the income and the property that is property value that's added to it. So each property class has similar categories, but there are threshold differences. For instance, a hotel or a motel, the attorney will look to separate out personal property from the structure when the property is bought or sold. Industry projections may be used for properties that are dormant a long time before it's sold, and the value earnings based on the occupancy will need to be included. So for a small single occupancy structure, you're going to look also to the use of the property. So often during the sale of a property, a small structure will make a change of use to suit the buyer's needs. It might be a variety store that is now a professional office, or a lawyer's office, or a dentist's office. So these changes will affect the sale price and ultimately the assessment based on the added value of the property. So sometimes when we look at a commercial property, we definitely know it's commercial, like with this building here. But sometimes when we're looking at a property, it looks like it's residential, but it's actually commercial property. And why is that? That's because there's a difference between what we might have as a frame of reference when we do a mortgage, which is a 1 to 4 family property, is considered residential. But in property tax appeal, residential property is defined as a 1 to 3 family property. To sort all this out, I give you a little chart. So the commercial property for tax appeal purposes is a 1 to 3 family home that is not owner occupied, that it's considered investment and commercial property. So you file an Article 7 property appeal. And 4 units or more is always considered automatically commercial property. So there are a number of different categories in the classification categories that we have to look at when we bring an action. And the 400 series is the commercial property taxes that we're talking about today. But other ones are like 100 is agricultural, 300s are vacant land, 500s are recreational, and 600 are community services. But today we're going to talk about the 400 series, which includes living accommodations, apartments, nightclubs, diners, luncheonettes, fast food industries, kennels, a variety of different storage facilities, etc. So when we're looking at a property, an example that I'm going to give you here is sometimes the category differences seem like distinctions without a difference. So if you look at section 484 at the bottom here, that's a one-story small structure. Sometimes it's compared to a 486, which is a mini mart. And why? It's because we look at the use of the property, and certainly the assessor will. So sometimes the owners don't understand. They're in a quandary about what their property actually compares to for tax appeal purposes. So we look at these differences and we try and look at the pictures of the structures. We look at the property cards. We look at the assessment rolls. And most of all, we can go on ORPS, Office of Real Property Services, and we get additional data to support our position. So where do we get this data? So New York State Department of Taxation and Finance provides us with a sales web data portal. So this is where we begin our search. So this portal, we click on it and we get a variety of different tabs that we're going to tab through. But first we take another look at our assessment roll card, and we make sure that we know what property class we're looking at. So this is a valuable source of data. As we tab through, we're going to look at choices like starting with county, municipality, the usability, which is extremely important, the property class, which we get from our assessment roll, the school district, and the sales range date, which comes from the valuation date on the assessment roll, and the sales price and the acreage. So the property class for the subject property is found on the assessment roll, and you need to start there. But sometimes, as I said, there are some similar properties, and we have to look at those numbers, like the 486 compared to the 484. And so what we want to do is run a scenario with our property code, and then run another scenario or two with other property codes according to what is similar to the subject property. What we're really looking for is relevant data. We want to actually be able to compare the property cards, the pictures, the physical attributes of the properties, the ages, and the ultimate use. And so by running these scenarios, you're going to eventually come up to a list of properties that you've sorted through that are most like the subject. And then the fun begins, because the assessor is basically doing the same thing. So where do we get the data from the RP for the data portal that we were just looking at? We get it from the RP 5217. So that's a form that we all are familiar with who've done closings, and it breaks down the property by seller, buyer, the tax billing address, the seller's the section, block, and lot number, the sale price. Over here we have the sales date, the contract date, sale price, whether there was personal property included. And section 15 becomes extremely important, because any attorneys that pay attention to this and check it off, especially if it's G, H, and I, there are going to be exceptions that the assessor is going to look at when they go to approve the data that goes on to the ORPS sales web data. We look at the year of the assessment, we look at the property class, we look at the school district, we add all of these things in. We're going to get the name of the buyer, and we're going to get the name of the buyer's attorney. And this way, the assessor knows who was responsible for putting the wrong data on, and then he can find a way to go back and try and change it. Why would he want to change it? Because it affects the usability. So on the list, if you've checked off usability, you want to know if it's arm's length and if it's usable. So if it's a fire sale, it's probably not going to be usable because the motivation of the seller was different, and the buyer maybe got a steal. So it's very important. And now maybe when you do a closing and you're filling out this form, you will think of me, and you'll think of the sales web data that the assessor is going to work with. So this is the assessor when he was a little kid. I think some of them are born into this role. And so he's saying that the full market value is his opinion of value. And that's different than the fair market value. See how they're so similar, fair and full? It's a play on words, but they mean vastly different things and ultimately sometimes the same thing. If we get the property tax assessment reduced, then fair market value and full market value will match. So the fair market value is usually the marketplace determiner by an arm's length sale. So what is the next step? So we want to look at the data. So where does the more data come from? So I said that sometimes there's income data that affects the property sale price. So here we have tax return information. So the first form is from an 1120 or 1120S. It's the form 8825. And in the middle section here, they talk about rental real estate expenses. And we break out some of these expenses, but not all, and come up with a rubric. So this rubric is like magic. We look at the gross income, we look at the vacancy, we assign a percentage to that based on the property type. We look at the effective gross income, and we subtract a management fee, reserves, and expenses. So the expenses are usually just related to the utilities, water, insurance, sometimes some repairs, legal expenses, accountant expenses, insurance, but never do we include taxes for this purpose. And we come up with our net operating income. So why don't we include property taxes in this calculation? Because the NOI is a pre-tax calculation, and it will throw off our numbers when we go to look to see what the NOI divided by the capitalization rate is. And that will give us our fair market value net of our income and expenses. And then we divide the equalization rate into that number, and we get our full market value, and hopefully it matches our fair market value determination. Wow, that was a lot of math, but it's basically breaks down to 3 or 4 things. So how is the property assessed? We look at the market approach, the cost approach, and the income approach. We just went through that income approach. We need a rubric to go through it, to be accurate, and to make a defensible claim if there's income in that property. So the assessor is going to look at these factors. But newsflash, appraisers also use the same criteria. And interestingly enough, when they use the same criteria, they're also coming up with maybe a similar or maybe a very different assessment. So part of the stage that we go through is we have an appraisal done. So appraisals are pretty expensive. They go from $2,500 and up, depending on the amount of time that's involved in evaluating a property and the income and the category that it's in and what it compares to. And so this appraisal was done for the purchase of a property. If we were doing an appraisal just for reducing the property taxes, see down here we have a valuation date. Our valuation date would be 7/1. Here it had to do with the purchase of the property. And so this appraisal would have had a slightly different scope. This appraisal is relevant to when the taxpayer brought a grievance, because it is evidence of a market value price. And when he brought his grievance a few years later, because the taxes marched up, we had another one, and that was based on the 7/1 date, and they were grossly similar. So when there's a significant difference between the full market value and the fair market value, then you have a case. An attorney will always look at those factors first and determine whether he wants to put the matter into suit. Why would we want to do all this work up front and look to see if we have a suit? Because most tax certiorari cases are brought on a contingency fee basis. So why would we want to spend so much time working on something and then we don't have a case and we wouldn't get paid. But if you break it down and you've looked at some of these worksheets and the sources of material and you get them under your belt, it really can take an hour or two to gather that information and then a little while longer to analyze it. And so then you would know if you have a case. Okay, so now we're up to the part of our series where we're going to file a complaint. So whether it's residential or commercial, we're going to file a complaint based on the RP 524. Now, the information from pages 1 and 2 comes largely from the assessment roll. You're going to get the property address, the section, block, and lot number, the property class, the land value, the total value. You're going to, on page 2, you're going to add realtor information, what the property sold for, if it was on MLS, it was arm's length, if it was sold between family members, and then you're going to let the assessor and the Board of Assessment Review know if you have an income producing property, and if so, you need to defend it, and that's where your rubric comes in, or those pages from the tax return. The pages from the tax return, at the bottom, you're going to add a certification and have the have the taxpayer sign them and notarize it. And that way they don't have to hand in their whole return, just that one page. And it's evidence of a tax filing that is true. And we have additional supporting information that we might want to include if we had an appraisal done for property tax appeal purposes, or maybe a market value appraisal. On page 3, we're going to go to part A and part B, and we have to, this is our decision tree. We have to decide whether we want an unequal assessment argument or whether we're going to make an excessive assessment argument. When we looked at the assessment roll model, we looked at section B, and that said, you know, we're going to look at whether it's a fractional or a full assessment. So when the market value is 100%, it's the same as the assessed value. Otherwise, if we look at section B and it's a percentage of 100%, then we know that we need to fill out unequal assessment. That can be very tricky, and you need to get your data from ORPS. Again, you're going to go to the little map, you're going to type in ORPS municipal profile, and you're going to click on your county and your jurisdiction, and you're going to go get this information through the submenus, and you're going to place it here. And then you come up with a value that is defensible and matches the first page. And then you're going to come up with line 4, you're going to come up with a value that you believe is the true value of the property. So line 3 is what the assessor put, and line 4 is what we want. When it's an excessive assessment, it's a little easier to argue. Usually the full market value is pretty equal to what the fair market value is in the jurisdiction. However, they could be off because of the comparables that they use, and that would be the basis of our argument. If we have an unlawful assessment, that's because maybe they forgot to give you an exemption on a property, that the property is outside of the jurisdiction. They've got the wrong assessment code, like if it's a billboard, but they make it vacant land. Those are the types of examples you would have it there. And then there's miscellaneous classifications. That isn't used very often. So if the assessed value has a lot of property in it, personal property, you know, it could be misclassified, and so we would use this section. Part 4, page 4, we're going to look at, this is the top part of the form, gives you permission to represent the taxpayer. The taxpayer signs this part, and that's your authorization to bring the action, the complaint. Part 5 is certification that any of the information that's included in this form is true. You usually want the taxpayer to sign it, but sometimes the attorneys sign it because they have additional information that they're adding. It can go either way. Part 6 is going to be a stipulation. So if you've grieved your taxes and in Westchester, you've gone before the assessor between June 1st and the third week in June, when you have to, on Tuesday, when you have to file, he could agree with you and then make an automatic change. This is a stipulation of settlement on his part. If you don't get it from him, you could get something from the Board of Assessment Review, and they will fill it out down here and give you their rationale. So step 2 is after you filed the complaint with the assessor's office, then you go in front of the Board of Assessment Review. Some jurisdictions like Rye require you to go there within a day or so of filing the complaint. They invite you to come. If you don't come, you forfeited your action. You need to present and give a copy to each of the board members of the documents that you're submitting and present your argument in 5 minutes. As you can see, they're very interested. This is probably at the end of their day or evening. And so you need to make your best argument. And then the board has 30 days from the final roll date, which is about 60 days from when you met with them, to make a determination. And when they file within 30 days of that determination, which in Westchester is September 15th, you need to file your petition if you need to go forward. So when the Board of Assessment Review looks at your documentation, it can go one of 3 ways. They can agree with you wholly, they can disagree with you wholly, or they can give you a partial change. We always accept a partial change, but if we feel like it's not enough, what we can do is file a petition anyway, accept what they've given us, and file a petition anyway, and then defend our petition with the evidence that we want to present, including the appraisal, the rubric, pictures, property cards, what have you. So step 3 is we're going to file a petition in Supreme Court. This petition in Supreme Court, you're going to file an RJI, hand in your $210. You're going to file a note of issue at some point to get in front of the judge to argue your case. We always file the RJI initially. The note of issue will be filed either that year or some years later when we bring all of the years in front of the judge. So the notice of petition and Schedule A will be filled out, and you make your argument on Schedule A of what you feel you're entitled to for the relief sought. And what happens is this is a mandatory e-file case, and so you're going to have to upload not only the petition, the notice of petition, and your Schedule A, but you're going to have to file a copy of the original stamped in received complaint and the Board of Assessment Review determination, plus any backup that you have, an appraisal, any kind of rubric that you want to share, pictures, property cards, anything that you want to include to make your argument. So what is the tax calculation? So the assessment times the mill rate equals the tax. I'm going to say it again. The assessment times the mill rate equals the tax. So this is a deceivingly simple calculation. That is because there are so many parts behind the assessment value and so many budget items behind the mill rate that it's not just 2 numbers times each other equaling the tax. So there's a vast sea of information that is needed to reduce the assessment and therefore reduce the property taxes. So even if the assessment is changed even a little bit, it will always lower the property taxes. And the reason behind that is because the assessment is a much larger number. It's a whole number, and the mill rate is a smaller number, a fractional number, and it goes into the tens of thousands of places. So when you multiply them together, you're going to get a reduction no matter what. We're going to look at our tax bill. So aside from this being a math challenging area of law, the forms are also a little bit convoluted. We're looking at a tax bill, and in this tax bill, we have a taxable value. That's really the assessed value. How would we know that? We really wouldn't know at first glance unless we looked at our assessment roll and our property on that assessment roll, because that gives us our taxable value. This is the entire improvement. And then we have the tax rate. That's really the mill rate. So this is the rate at which the assessment is taxed. So the assessment times the mill rate equals the tax, or the taxable value times the tax rate equals the total tax. Down here at the bottom, they will always give you the mill rate that they're using. The equalization rate that they're using. So if you're bringing it in 2022 and you're looking at 2021 data, because of the difference in the roll dates, you can get confused and get screwed up. But you have to be mindful that you're going to take the actual assessed value from either the tentative roll or the final roll if it's come out, and you can divide it by the current equalization rate, not just what the rate is on the tax return, on the tax bill. So when you file for property tax relief, then there's freeze years involved. So freeze years involve when you're successful and you've reduced your property tax, you cannot bring another action for at least 2 years. 2 years have to pass before you can bring a new complaint. If you're unsuccessful, you can just keep complaining every year. In New York City, as an exception, we can file there every year. So aside from the stipulation of settlement that's on the RP 524, you can have one that looks like this. And this is a stipulation of settlement that has already gone through the Board of Assessment review, and maybe you filed your petition, and now you've gotten an agreement, either administratively or from the judge, to reduce the assessment from one number to another number. So you put that information on the form. You represent the petitioner, so you sign it, and then you have the assessor sign, and then they hand it into the court, and the court signs, and you get an e-file notice that the taxes are going to be reduced. So from this time, the stipulation is going to be handed into the Department of Finance, and they have 90 days to act on it. It used to be 60. They have 90 days to act on it. And that is because they have to line up their budget with the repayment of the tax that was overpaid by the taxpayer. So some years you're going to get a refund, and some years you're going to get a reduction in taxes going forward, depending on when the settlement came through. So this is my guy, Happy Joe. So happy days come to those who are successful in reducing their assessment, either at the administrative level or through the court. So the property tax refund will kind of look like this. You have the county, school, and sometimes special districts that add up to the total refunds that the taxpayer is going to get.
Hi, I'm just going to interrupt for one moment just for the course code for today.
Okay, so the course code is TAX, T-A-X.
Thank you.
Thank you. And so this is what the county refund looks like. You always want to be mindful of the taxes, the assessment down here. The assessment, corrected assessment is going to be different from one year to the next. That's because that number divided by the equalization rate equals the market value that we're alleging and stipulated to. This is what the school refund looks like. Again, the school year and the tax roll year are different from one another. You just need to be mindful of that. And you need to be mindful that this settlement assessed value really represents the new full fair market value number that you stipulated to. This is what a town tax refund calculation is going to look like. And so, to remind you, only attorneys can bring commercial property tax appeal when there is a corporation or another entity involved. And I just want to leave you with a few final thoughts that statistically, you have a 25% chance of being over assessed and 25% chance that you're under assessed, and the rest is in the middle of the bell curve. While nothing is certain except death and taxes, I just want you to know that it doesn't mean that you have to overpay your property taxes while you're alive. So all of you now have a few tools in your belt to check your assessment and perhaps lower the taxes. I hope you guys have a great day. I'm open for questions when you're ready.
I just have just a few questions. Has COVID had any impact on tax valuations?
Yes, the marketplace is dynamic. So as the market prices go up, the assessors feel that their assessed value should march up to the marketplace. That doesn't mean that the same house that was taxed last year at $10,000 should be taxed at $20,000. So we always still have to just look at the data and look at the value of the property, but it will wax and wane. Typically, property tax appeal cases go 3 years or more, and that is because there's usually a trend in the waffling of the data. And so assessors and courts won't jump in and give you a settlement if they think they're at the trough or at the high point of the waffling of the market.
You had mentioned that you must be represented by an attorney, but you didn't mention if the owner is a trust. Is that still the case if the owner is a trust?
It isn't. You can bring your own case if it's in a trust, but it becomes even more complicated with a trust because sometimes the trusts are only percentage owners, and the family limited partnership may own another fraction of it, and then the LLC inside of that may own a fraction of it. So depending on what percentage ownership, it may boil down that you actually do need an attorney.
I saw that school tax refunds went back several years. How many years going back can you look to claim a refund?
You can't really look back. You have to start a lawsuit. So if your lawsuit starts in 2014, but the roll year is 15-16, you can start there. We got a refund because our lawsuit went right through 2022, and the settlement happened in 2020. So from 14 to 20, we got refunds, and the roll years and the school tax year was different, but we got refunds. And then from 20 forward, we got a reduction in tax.
How do you find the experience any different besides the freeze periods in New York City?
New York City is its own species. You got to be aggressive and file each year. Otherwise, if you don't produce the right amount of data and meet all your deadlines, you know, your taxes are going to be raised, and then it's going to be another 2 years before you can lower them.
Okay. Do you expect assessments will be reduced at all with the real estate market slowing down a bit?
Well, there's some lag times. So the assessments, they can't really do spot assessments just because you bought today at a higher price, you know, that they can just change your assessment tomorrow. They have to stagger how they increase the assessments. There's certain caps on the assessments, how much they can climb each year. But I think that they're going to go up because the market went up, but not just because individual properties went up. You still have to compare your property with the market.
Okay. And last question for today. How do appraisers determine value of a development site and or ongoing construction?
So a development site is based on how much is finished. Okay, so if they put in the foundation and they've, you know, leveled the land a little bit, it could be 20%. It sort of follows what a construction loan would do. They're going to look at the percentage of the property that's finished to come up with a value.
Got it. And two last questions, clarifications on two items. One asked that you repeat the mill rate, and the other one is how you calculate fair market value.
Okay. So the mill rate is not calculated by us. It's given to us on the tax bill. Okay. So the assessment times the mill rate equals the tax. So if you have an assessment of, $8,500 and the mill rate is, 1.83, you multiply them together and you get the tax that you owe. So this data is actually given to you. You just have to look at it. So, but the confusion comes in because for the most part, the receiver of taxes uses different terminology. So they're going to call it something slightly different, but just know by comparing what's on your assessment roll that number, whatever title they put on it, is actually your assessment rate.
Got it. And then the other item was fair market value.
So fair market value is what the marketplace determines is your property. There's a definition that I shared earlier that it has to be an arm's length transaction, and it's where a seller and a buyer aren't under any duress to come to a conclusion to make the business of the sale happen. And so what happens is that is the true value of the property. But sometimes there are other factors that come into the fair market value, like because if it's an income producing property. And so we add additional things to come up with the ad valorem tax.
Great. Linda, thank you so much for a great CLE. I just wanted to remind everyone that I will send the material shortly to everyone who attended, and you'll get your certificates by next week. Thanks again. The lecture was great, and we had almost 200 people join us today.
That's awesome. I hope everybody enjoyed it and that people can reach out to me. This is my information if they need to ask me some questions or need additional help or material.
Great. Thanks again. Have a good day, everyone.
You're welcome. Bye now.